With figures like Jeff Bezos and Elon Musk constantly in the spotlight, it's easy to wonder how the 1% really made and kept their wealth. While most of us may never reach billionaire status, there are key financial habits that can help us build and manage wealth. First up, having a clear vision is essential. Most self-made millionaires didn't just stumble into their success, they set long-term goals and worked towards them. Setting financial goals gives you direction and keeps you motivated. Whether it's saving for a house or giving back through philanthropy, a goal with a deadline helps you stay focused. Next, keep an eye on your spending. It's tempting to splurge, but many wealthy individuals are surprisingly frugal. Take Mark Zuckerberg, for example. He wears the same style t-shirt every day, prioritizing purpose over luxury. Sure, those t-shirts might cost $600 each from Brunello Cucinelli, but back then, they were all about making strategic choices and saving wisely. In fact, many billionaires practice disciplined spending, focusing on their future wealth rather than short-term indulgences. And here's something to keep in mind. Around 80% of billionaires come from some of the wealthiest, most influential families. While that can give them a head start, the habits of managing money wisely can still make a big difference in building lasting wealth. Being frugal doesn't mean living like a hermit. It's about being smart with your money. The rich love their luxuries, but they don't splurge irresponsibly. Instead, they spend below their means and keep lifestyle inflation in check. It's like buying a pizza and saving the crust for later. Sure, it's not the most glamorous, but it's a solid financial move. Instead of blowing your cash on expensive items, consider saving or investing it. Maybe opt for a used car instead of a new one. Hey, it still gets you where you need to go. Or plan a vacation during the off-season when prices drop. And no, you don't need the latest iPhone just because it's shiny. If your old phone still gets the job done, hold on to it like it's the last cookie at the party. Now, habit 3, invest your money. The 1% didn't get there by sitting on their cash. They build their wealth through smart investments. Warren Buffett says it best. The money is made in investments by investing and owning good companies for long periods of time. You don't need a fortune to start investing. If this advice resonates, hit that like button and let's keep the momentum going. Habit number 4 is using a reverse budget, which is essentially paying yourself first. The difference here is that instead of focusing on your expenses, you prioritize saving and investing. The goal is to allocate money for your future before spending on anything else. A popular method for this is the 50-30-20 rule. 50% for needs, 30 for wants, and 20 for savings. If you're really focused on saving, you could even adjust this percentage to say 30 or 50%. It's okay if you don't hit those targets right away, just keep adjusting as you get comfortable. And if you're worried about sticking to your saving goals, set up automatic transfers from your paycheck to savings or investment accounts. This way you won't even miss the money. Habit 5. Maintain an emergency fund. It's exactly what it sounds like, a stash of cash for unexpected events like job loss, medical issues, or car repairs. Financial experts typically recommend having 3 to 6 months of expenses saved or 6 to 8 months if you're self-employed. Having an emergency fund keeps you on track with your long-term goals because it prevents you from dipping into your investments when something unexpected happens. You can keep it in a high-yield savings account for easy access or in an investment account for potential growth. Just keep in mind that an investment account can carry some risk and may not be as liquid. Number 6 is to understand credit and debit. Understanding how credit and debit can work in your favor is definitely something that the 1% takes advantage of. Most of them will have the mindset that it's okay to get a loan or use credit on something like a business or rental property or some other project that produces cash flow, but it wouldn't be okay to do the same thing to buy a couch. This is because the first goals, a business or a rental property, those are assets. A couch is not. The rental property and business will generate cash flow. It will make you money and likely go up in value over time. The couch will probably do the opposite. And as far as credit cards go, a lot of them know how to leverage those credit card points and credit card rewards. Many rich people will use credit cards that give them travel rewards or points or money towards their business expenses. Chances are, when they are taking those extravagant vacations, they are offsetting a lot of those costs by using those credit card rewards points that they have amassed from their everyday expenses. What do you think? Do you see credit as an investment tool or just something to avoid? Let me know in the comments. If you're looking to make the most of credit card points, pick one that matches your spending habits. If you travel a lot, go for one that gives you extra points for travel expenses. If you're a grocery store regular, a 2% cashback card could be your best bet. Or if your business has high expenses, look into business credit card. Just don't get the one with the most points for ordering pizza unless that's your business. Now on to number 7, tax laws. It's not the most exciting topic, but the rich definitely know how to use tax laws to their advantage. There are tax advantage accounts like 401k or S, IRS, and 529 plans that let your money grow with less tax impact. If you own a business, you can even write off business expenses. Learning about taxes can be dull, but it's worth it. Many of the wealthy hire pros to help them with taxes, like CPAs or lawyers, to make sure everything's done right. Why do the rich hire accountants? Because they want to keep more money than their accounts have calculators. Habit 9 is about constantly educating yourself. The wealthy dedicate time to learning about new trends in finance, wealth creation, and business. Bill Gates even dedicates an entire week each year just to reading and thinking. Warren Buffett reads constantly too. It's all part of staying sharp and discovering new ideas. Finally, habit number 10. Set a system for your money. Create categories or buckets for different saving goals like necessities, emergencies, investments, and fun. This helps keep you on track and stops you from dipping into the wrong bucket. You could use separate accounts or just track it on a spreadsheet. Consistent practice of these habits can definitely have a positive impact on your financial life. All you have to do is start making those small steps in the right direction and actually make them into habits. I hope, guys, these financial habits will be helpful in your life. I wish you only successful trading sessions. Don't forget to like, subscribe, and see you next video. Bye.